Good morning, good afternoon, good evening, one and all. It's time for another fun-filled, exciting adventure of the Smoking Barrel. I'm Rustin Edwards, based in Geneva, with my illustrious co-host in sunny Dubai, Mr. Stanley.
Hello, hello. Back from London.
Those
Just
dulcet tones coming across
yes,
the radio.
yes. There you go. No, London. I was in London last week. Whilst we recorded Monday, that was good. And I went there Tuesday. I survived a flight with a mother-in-law. No, I'm joking. It was fine actually. And then I survived Storm Amy, which ripped through the east coast of England when I was there. Um, I just can't deal with sub 20 degrees these days. I'm not going to lie. Celsius, that is.
You would not be doing good here in Geneva right now. We're right at 10 right now.
Frightful. Frightful. We're 33 here today with a lot of humidity, but weather is getting better. I'm going away next week with the family, or just chilling, and then be back in the next couple of weeks. But that time of year when the whole world flocks to the UAE and doesn't leave until the end of March, so I can't wait.
Oh, we got pumpkin spice lattes in the Starbucks. We've
Yeah.
got kids getting their costumes ready for Halloween. A lot of candy out there. And what's going to be good for the trick-or-treaters? Well, if you're a crude trader, probably not that because crude is doing absolutely nothing.
Well,
Still,
where was it? Let's do what we do, the old, let's have a little looky, Christmas cookie at where flat price is. Where were we? So last Monday was the, um, hang on, I'm just getting me bear 29th of September. 29th September. Okay, Brent was high. It was 60. Is that right? Was it up there?
yeah, it closed at 67, almost $68. We're at 65, $66 today.
Yeah,
I
and
would
it's
call
come
that,
up.
a par three with nothing else happening there. Straight shot to the pen.
Yeah, exactly. I mean, yeah, that was quite an aggressive week that for crude up to 70 we went here. But look, I mean, yeah, look, the market was at least $1 backward as well, so the backwardation crystallized came in. That's why where we are now, but more or less slap bang in the middle of the 65-ish to 70, where markets have largely been. Gas oil's come off a little bit. Where were we last week? $700 a ton. We're at 675 now. We dropped down to a low of what, 663 and a quarter. It seems like that was a bit of support on gas oil there. But no, market's looking largely flat. I mean, I've been lucky enough the last couple of days. I was on the radio here. I hosted with Brandy the business breakfast on Dubai Eye, which was great. And I was back on as a guest this morning. And it does seem to be that, you know, when there's not much to comment on, it's well, Brent and oil markets are largely benign. But is that a bad thing? I don't think it is. I think it's if you're an OPEC member, it's business as usual. Seeing in mind as they bought back another 137,000 barrels a day at the weekend.
Yeah, and that's probably where a lot of the strength has popped back into the market because there were expectations of higher return to the market. Although different members of OPEC had their different news leaks last week. There was some commentary that we could see a 500,000 barrel return, or if you wanted to take the Russians' perspective from Novak, OPEC was going to cut production. So a lot of different noise out there when it came to OPEC, but at the end of the day, okay, they're continuing with their strategy of bringing back something every month.
It's a,
Brought back another 137,000, so voila.
It's amazing, isn't it? Most people usually just kind of go, "Oh, let me just test the waters." What OPEC do is sort of get hold of a poor energy journalist and say, well, we might bring back 500,000 barrels a day. So let's see what the market thinks and goes, yeah, nah, sells off. And then at the weekend, you actually do something proper and then the market pops up $1. It's amazing, isn't it? How you can cut that OPEC can still cast that line and see how the market reacts to it.
Well, it's the fickle friend of the trader. It's sell the rumor, buy the fact.
Yeah, I mean, you're right, and I think that that's largely what's contributed to the pop today. Let me just go back to what vast majority of people are talking about. So just sharing this, the front of the curve is still pretty steeply backwardated, isn't it? This did come down deck Jan, so we're trading deck now. Santa is on his way, 55 cents a barrel backward. I mean, that was trading high 30s, wasn't it, at the end of last week? Because people thought there'd be a lot more oil back, and then the markets as tight as they are, but markets are still pricing in quite sizable tightness in the front month. Would you agree?
Well, I don't know if I'd call it tightness in the front month. I think it's still geopolitical risk that's providing a lot of that support in the front.
Right.
Ukraine is still continually, hitting different Russian oil infrastructure, and possibly hitting some of their export capacity as well as taking refining capacity offline. I mean, Kepler, your colleagues had a presentation about this all yesterday,
Yeah.
around Russian oil capacity being hit. IRR had a report out, almost 1.4 million barrels of refining capacity offline, plus some associated other oil infrastructure, which could impact exports of crude oil as well as exports of gas oil. Some traders are saying now that they're going to be, roughly about a 300,000 metric ton drop in gas oil exports in October, which doesn't sound like a lot, but we're going into consumption season, and that could be a high impact depending on where you're at in the world and how your harvest is going.
Yeah. Yeah. Let me have a look at Russian exports because I haven't really. Let me show you one moment what's happening. Yeah, because Commune and Amina, I think, were on the webinar yesterday. So let's look at gas or diesel exports. Look, you can see this is in total, obviously. So we got this in KBD. Let's do it in metric tons. So where are we? So Jan 2024, the Russia exported 4 point, just under, say 5 million tons for shits and giggles of gas oil and diesel. And we're now at 2 point, we're halved that. And
Yes.
that is the lowest with certainly over the last 2 years. If we go back to 5 years, look, that is, you can see, I mean, it was DEC
Basically
2020.
COVID.
Sorry?
Basically around COVID and all the issues with COVID.
Yeah, so we've got 2.47 million tons here in September. We go back to all data. We're going to have to go back to October. It's the lowest we have on record. That's the lowest we have on record. Now, I mean, obviously up and down, oh dear, COVID. Oh my God, another war. Oh my, I mean, it's boring. But you look at this, just bring that back so it's not too much for the old eyes, especially yours at the moment, Russ. 18 months, that's a pretty, if we extrapolate that down, that's pretty grim if you're a Russian refiner, right? I mean, this is what we've been arguing all year. The longer this carries on, the longer the oil complex is supported, no?
Yeah. Because you got to remember, a lot of the Russian gas oil is going to markets that are not Europe, not the United States. It's going into South America, Africa, and therefore, as these markets, they still have their demand for gas oil. And so, what eventually happens is, without the Russian flow, they start backfilling from other locations. Now,
Yeah.
with the EU putting the kibosh on Russian origin crude processing into gas oil, i.e., from India or from Turkey,
Yes.
okay, those locations get backfilled via, um, if Russia reduces their exports, okay, Turkey and India will backfill into those regions where the Russian gas oil was going, but it still puts an overall tightness in the gas oil market, which adds support to the gas oil cracks and the whole distillate complex. Now, it's
Yeah.
also having a knock-on effect to the other major export products of Russia, naphtha and fuel oil, high sulfur fuel oil. High sulfur fuel oil cracks have rallied almost $3 a barrel over the last 2 weeks, as
Have they?
again, the Russian exports of high sulfur fuel have started to drop off because the refineries are being hit, and that's part of their production run. Same thing with naphtha. Naphtha has gone from being in contango to being in backwardation again. And a lot of it is the supply of naphtha is getting squeezed again from Russia exports going into the market. So, the whole Ukrainian impact is putting a more bullish bias on refining margins going at least into Q1, if not Q2, because you're losing that product supply from the from the Russian refineries into those, say, second tier markets that are now going to start looking for supply from Europe and United States refining sector, maybe Chinese, maybe Indian refining sector as well, to backfill where the Russian oil was going.
Okay, two things on that, right? One, just before we get on to Russian, you know, how that's working, right? How Russian oil is flowing. What happens there? Like, when does the point come where I think what is there, 35% of Russian refineries have been impacted. They can no longer run the crude. At what point do we get that? Does that converge where there's now more crude oil available for export because the refineries can't run it? But at what point does that where they physically just can't ship the oil because of the sanctions on Russian on the Russian fleet or how they can move Russian oil, etc., etc., where they have to lock in production, where they have to like close down the taps, because it's not just necessarily about okay, well we can't let's turn it down this month because we can't run it through and we can't actually ship it. We're at ullage on all our storage positions on at the terminals when it comes for export, because when they shut them down, that's a big job, right? And have they got the maintenance teams, the crews to then say, okay, well now the refineries are back up, let's get them back going again because they haven't been maintained properly, those fields, right? Is that quite a lot what the risk is that people are pricing in?
Well, the first thing is that Russia is fairly much at capacity for crude oil exports. They can't really export more crude because the logistics systems aren't designed to export more crude. I mean, when you think of the Russian export mentality, it goes from wellhead to rail car to export terminal to ship. Then you also have some pipeline capacity as well. The Druzhba pipeline, you have the pipelines going out to China, but they're pretty much all at capacity. The Druzhba has a lot of spare capacity because you're not pushing crude into the European refining sector.
Right.
So it's pretty much your only export route that you could increase exports from is into Europe, and since Europe's not taking, that's off the board. So you end up with a system that's probably close to theoretical max capacity already on exports of crude oil. Could there be an extra 200,000 barrels a day? Maybe, but I think when you start hitting a 5 million barrel a day mark, that's probably it for Russia on crude oil exports. So it does start backing up into storage or backing up into turn off the well. When you turn off a well, you have to be very diligent in how you do it because resuming and restarting that well could be problematic. I mean, wells are finicky things because you're dealing with Mother Nature as well as how well you have your drill head in and where your offtake pipes are sitting inside the well itself. So, there's a lot of things around the structure of the geology. Can they get the well simulated to resume production? And can you get production back to where it was when you shut it down? And
Yeah, look,
the
I mean
third
that's
issue that we're
sorry, go
coming
on.
into is we're coming into this season called winter, where a lot of Russian oil production is up in the Arctic regions, i.e., Siberia, Trans Siberia, where temperatures can drop to minus 20, minus 30 degrees C. And getting crude to move at those temperatures, especially if you shut in a well, could be very, very problematic.
Yeah. That's yeah, I mean look, that's I mean what data do we have to wait for that to really come in? Because that is a problem that Russia don't even want to not acknowledge, but even want to go through, right? And here's the interesting thing. There was an article overnight. Traders seek yuan payment from Indian state buyers of Russian oil, sources say. So Beijing are acting as a conduit to pay for Russian oil in yuan. Now, I mean that's I know that's not a new thing. There has always been certain currencies that have been conduits to bypass the dollar to buy Russian oil. Is this a new? Will this be the new way that India buy Chinese oil? Sorry, Russian oil. Will they buy in Chinese currency to bypass these sanctions?
Well, I think that only depends on how much appetite does China have for the rupee, because you have to think of the balance of exchange. When you think of that, you're taking uh, rupee, turning it into yuan to buy ruble-based products. So is the Chinese government going to be willing to stockpile rupee infinitely?
Yeah. It says
So
this is from my mate Chris Schmollinger at Reuters. India became the top importer of discounted Russian seaborne oil since Western sanctions suspended imports from Moscow. Payments in yuan will expand the availability of Russian oil for Indian state refiners, given some traders would not accept other currencies, the sources said. Because there has been a sort of easing of ties between India and China, hasn't there, recently?
Yeah,
Um,
I mean, there has been some realignment in the East of Asia um, trade flow. I mean, that has kind of happened. I mean, Russia, I think, is part of facilitation of all that because Russia needs markets, and those are the markets you can go to
yeah.
when you're exporting crude oil.
Yeah. I mean, look, it's one to watch. I mean, look, you'll always see anyone trying to come up with a scheme and an inventive way to bypass sanctions so they can buy oil to keep the wheels turning. Of course, I get that. So this isn't a surprising story at all. It's more India and China and Russia getting together and what does that mean for the US administration? Anyway, look, is there even a US administration at the moment, or are they on shutdown? Are they all on holiday?
Well, the U.S. government is in shutdown right now, so there's still people working.
Are there?
Donald hasn't vacated the White House yet.
I mean, it's what government is shut down because explain to the uninitiated what has happened in the Capitol building.
So we've had a so the U.S. has not passed a budget yet for 2025. And so the U.S. has been operating on what's called a continuing resolution, which is where basically the U.S. Congress, which is the purse string holder of the U.S. government, has allowed the government to borrow more funds in order to finance and fund the government under the prior year's um, budget. No other word to say other than budget. So the first continuing resolution happened in March, and then the Trump Big Beautiful Bill was passed. And then the Democrats in the opposition party decided that they wanted to see certain things that were cut out of the Big Beautiful Bill returned to the budget, and the Republicans refused to do so. So therefore, we end up going into the end of the fiscal year at October 1st without a budget passed, and therefore a new continuing resolution needed to be passed. So far, that impasse is held fast, where the Democrats have yet to concede and vote for the continuing resolution to keep the government open. So therefore, as of October 1st, the government was forced to furlough anybody who's considered a non-essential government personnel. So certain groups have been furloughed, members of the military, air traffic controllers, people in the budget, the Federal Reserve are still all on station, still doing their jobs. Members of the U.S. Congress are still there doing their jobs. The executive branch, for the most part, is still there doing their jobs, but a lot of their support staff has been furloughed. And so it's now kind of a wait and see to see which party blinks first to get the government back up and running.
Yes, that's the short version as well, people. You know, jeez, I just find it extraordinary that the world's biggest economy is shut down, essentially. And it's
Well, it's extraordinary, but what has that been doing? It has been causing gold to go through
right.
the roof.
That's what I was going to say.
Um,
Can you bring up that mental chart you showed me before we came on air, please?
yeah, this is a chart on CNBC. So just to give credit where credit is due.
Yeah.
Um, so this right here is a 1 year chart for gold. And we can see that gold has just been on a tear since the beginning of the year. I mean, it kind of coincides with the inauguration of President Trump. We started off gold on December 31st at $2,600 an ounce. And here we are today at 4,050 an ounce. And it's just been
Wow.
a straight line up. Now, you can also correlate that with the weakness of the US dollar versus the euro and versus all the other currencies. The US dollar went from 102 to 118 versus the euro this
Mm.
year. Currently, it's at 116. So there's a definitely correlative factor of the weakness of the US dollar, the weakness of other currencies, and the strength in gold.
I mean, I heard, and yesterday Goldman Sachs came out saying that we joked about this, but gold could hit $4,900 an ounce by the end of next year. So Deck 26. I don't think they wanted to say 5,000. I think that just sounds a bit too much. But
I think 5,000, they should have just conceded the fact that it could go to 5,000. I'm not saying
right,
that I'm a gold
exactly.
supporter. However, gold is it was JP James Pierpont Morgan said during his testimony in 1917, gold is currency. Everything else is credit.
Right, there you go. I did not know that that's what JP stood for, but is that what JP stands for?
James Pierpont Morgan.
Did not know that. That is a fact of the day. James Pierpont. There you go, people. Like, comment, subscribe on that, please. Share with your friends. No, but there was a mate of mine. Well, I was when I was on the radio. So not a mate, a guy I know, and he's a bit of a legend in these parts called Jeff Rhodes, who's a gold commentator, ex-gold trader, been around for years and years and years. And he was saying on the radio this morning that gold is on a tear because of the latest shutdown. He could see a correction down to about 3,600 an ounce. There's support there, but a lot of people who were perhaps gifted gold when they were younger are now making their way to the gold souks in Dubai or Dubai Gold and Diamond Park to get rid of their gold because they're making so much money. And one of my favorite programs on Discovery, dare I say it, is Gold Rush. And I remember watching the first series on that.
Schnabel.
Parker Schnabel, yeah. When it was like, I think gold was like $800 an ounce or something, and it stayed steady, steady, steady. In the last 3 years, he's been making a fortune. Well, God alive, is this the start of the next gold rush? They always say the people who make money during the gold rush are not the people searching for gold, but the people who sell wheelbarrows and spades. This is the opposite, right? This is where the very thing that people are searching for is going through the roof and looks like it continued to go that way. And it's mad, isn't it? Is that
Well, I
people are
mean,
going into a safe haven and what?
well, it is more, I think, a safe haven trade than anything else for gold because, again, you're looking at global economies. They're not really doing that hot. You have government debt piling up. France, the prime minister, only there
Oh,
for 27 days, resigned.
that
So they
is,
can't get their act
yeah.
together when it comes to a budget. You got the German economy not doing so hot, the Chinese economy struggling to move along. And, there was an article the other day about how the Chinese EV manufacturers are resembling very much Evergrande, and the problems that hit the property markets in China, where you have production, over capacity, and nobody to buy the units. Um,
Well, hang on, because I saw an article this week in the BBC where BYD sales in the UK are up 880% year on year.
well, they might because they're discounting the cars to make a move.
Yeah, well, I mean, so Saudi OSPs came down so that people are incentivized to buy their crude oil. Does that mean they're desperate or are they just moving with market dynamics?
Well, that's you said it, not me.
Look, it does piss me off when people kind of say, not you, but oh, sad, OSPs are down and there's some distressed cargo. If people inherently have length in something, Saudi have crude. I have pizzas because I've got a pizza oven in my garden. If I made more pizzas than people had to buy, than people were going to buy, then they buy my pizzas. You should, but if they did, I would sell them at a discounted price. If you have something and too much of it, you move with market dynamics and incentivize people to buy it. I don't. I mean, if I think I'd like to read that Chinese article that there's this overcapacity and it's going to go the way of Evergrande because the Chinese electric vehicle distribution now is a global trade. It's a global trade. And Tesla last night, I think, came out with two new models that were very underwhelming. I know you're a Tesla fan, you're a Tesla fanboy, Edwards, but other electric vehicle manufacturers are available, and it's the Chinese. And I just think that they're building some really good cars. They're taking market share. Sure, if they have to sell through value in order to get markets moving, that's what people do, isn't it? I don't see that as a bad thing.
Well, it's just something that some people are looking at the way that the EV market has developed, and when you think of how many brands of EVs China has, I mean,
Yeah.
it's like 300 brands. It's almost like how the U.S. automakers were back in the 1930s, 1920s, where you had all sorts of companies building cars,
Yeah.
and it finally consolidated all into the three big ones, the big three in the U.S. from 20 to 50. But nevertheless, it's still something to think about is that if they've taken their production driven model to build, produce to the point where they're overstretching their market because they've produced more than the market can take.
Yeah.
It's a very typical issue that you see in China when it comes to their manufacturing, because at the end of the day, their government is focused on, we said GDP at X number, that number is going to be hit no matter what we do. So we'll run refineries until we can, and even though we have no demand for the product, we will build manufacturing, we'll build houses, even though there's nobody to buy the houses to show that GDP.
Yeah. Okay. I mean, I don't buy it. But anyway, look. Just before we
Watch that
close up
space.
on, before we close up on the week, there was an interesting article this week in Bloomberg where just going back to oil instead of which brand of Chinese car to buy and all this nonsense. There was an interesting
Well,
article
let's
in
circle
Bloomberg.
back to Chinese crude oil buying.
Yeah, well, that's what we're going to do. But the market is torn. We're at 65, largely been around there. We touched on that earlier on, 66 deck Brent, 66.10 now. Um, this glut that many people are sort of showing, or the S&D balances are showing, hasn't yet crystallized, and China are sweeping up and absorbing a lot of the excess barrels in the market. Inventories were drawn in September. Buying is back in October. And this is written by my colleague Matt last week. Global crude exports hit a 5-year high in September. Just look at this chart here. Obviously, 2020 and 2021 largely aberrations in the market because of something called COVID, the tour. But look at what's happening in this year. So what are we now? Just done, well, about 45 million barrels a day of exports. That's huge. Is it bearish crude? It came off $1. It hasn't really priced in. I know we said, and we have been banging the drum. What is that catalyst? What is that point where the market does start selling off and corrects back down based on this gigantic crude build that so many are forecasting? It's the 8th of October, Rustin. Winter is here or nearly here, 10 degrees. You've got a month left before, you start seeing snow on the peaks and all that kind of thing. Christmas buying will be there. People are buying for December delivered cargoes now. We haven't seen this build yet. Are we days away now? Because people were thinking it was weeks and months before. Is it imminent?
Well, I would say that we're probably seeing glimmers of the build starting to materialize. And I say that because you look at how much crude is on the water. I
Right.
think the numbers were, a fairly high amount of crude oil sitting on the water at the moment. You've got, people not buying cargoes or unsold cargoes of Murban. You have unsold cargoes of Nigerian,
Yeah.
which
They
doesn't
go.
show things being pushed in where they need to go. So I think you're starting to see that manifestation happen. Now, does that mean that we get crude into the 50s? Maybe, maybe. But you can easily see crude stay at this 60 to $65 range and go to a dollar contango, because that's kind of where we're at when it comes to supply and demand, because refining margins are still robust. They're still very good. And a
Yes.
lot of it's being driven by the distillate complex, like we said earlier today.
Yeah. Yeah.
So when you have good refining margins, it's the only problem that we have in the West is, of course, refining capacity has been actually shut down and closed. And so we're losing refining capacity in the West, not gaining refining capacity. It's all in the East is where the refining capacity sits. But even then, as their diet is being primarily satisfied with Iranian and Russian crude, which, despite all the sanctions, has had zero impact, I think, on those flows.
Yeah.
Um, I think we could start seeing that commercially sellable crude build more stocks and cause the sell-off to happen. But again, it has to actually start showing. I think systems like Kepler need to start seeing crude oil tankers loaded, anchored, waiting to go.
Yeah. I agree.
Now, I think it's going to hurt the contango a lot is interest rates, because when you think of interest rates right now, Javier Bias had a very good article about this in Bloomberg about today interest rates are double of where they were last time we had contango, or if not even double, even 400% higher than where we had contango. Last time we had contango, we were dealing with a zero interest rate market. Currently, we're at 4.1% on the 10-year note, 2.8%, I think, on a 2-year note. So in those cases, it's going to cost more to get into a contango storage position than what it has in the past.
Yeah, dramatically more. Yeah,
And if you think shipping right now, tanker freight rates are through the roof. You got VLCCs at over $100,000 a day, TCE equivalent.
yeah,
Suezmax is running around $60,000 to $70,000 a day, TCE equivalent. So owning tankers right now, you're making money hand over fist, more than happy to keep the crude flowing and less incentivized to do floating storage at the moment. So, I mean, we could see a market that goes into a contango, but how deep that contango gets is really going to be an impact of where freight rates are and the interest rates, because the cost of tanks hasn't really changed that much. That part of the storage fee is still negligible compared to these other two, which have increased greatly over the period. So your inland transportation cost is going to really dictate how deep the contango has to go in order to really start building inventories in crude.
yeah. I agree. I mean, look, April, May was trading it minus 5 cents yesterday. It's now flat, so it's on the edge, but still 55 cents backward in the front. 66.07 we are. Deck Brent to close the week. I'm away next week or off next week. We'll come back to you in a couple of weeks. Yeah, I mean, not just keep your eye on the headlines because always do that, but keep your eye on those inventory builds because if that's week on week, stats look pretty good for products this week in the States. But look, I think that's the one thing that everyone's watching is, like you said, if stocks start materially building the front of the curve, hold your hats. We could be back down to, we could be in the high 50s before you know.
Yep. Oh, definitely.
All right, mate. Good to see you all. Like, comment, subscribe.
Yep. Like, comment, catch us on Spotify, YouTube, and LinkedIn, and
Yes.
we'll be coming at you later. Happy trading.
Ciao.